Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 15th of May 2022. Last week, gold and silver took quite a hammering. And the question is, are we to expect more of the same this coming week and in the weeks to come? Some believe that we are, including ourselves, short term. Now this video is a copy of the video we produced yesterday, which is our regular weekly update. So if you've listened to yesterday's, there's no need to listen further to this one. If not, then enjoy. Let's get to it. Gold fell $72. Yes, $72 last week, falling from 1884 to 1,811, having hit a high of 1886 and a low of 1799, actually falling below $1,800, a fall of 3.8%. In sterling terms, it finished the week at 1478, down 48 pounds, and in euros it closed at 1,741 euros, that's down 45 euros. Silver fell $1.25, falling from 22.39 to 21.14, having hit a high of 22.39 and a low of 20.47, a fall of 5.6%, almost 2% worse than gold's fall. In sterling terms, silver closed at £17.23, that's down 91 pence, nearly a pound, and in euros it closed at 20.30 euros, that's down 0.92 euros, so nearly a euro. Of course, because of this, the gold to silver ratio rose, and it rose from 84.1 to 1 to 85.7 to 1. So what was our forecast for last week's trading range? Well, we concluded last week's video with the following. Our natural sentiment is really to expect lower prices, though we are acutely aware that analysts are forecasting in the main higher prices. We're not totally convinced the markets have fully digested the news as yet, though. And that was obviously the news of higher rates being forecasted and aggressive rate increases over the next two FOMC meetings. Now we see gold trading, this is what we stated, we see gold trading between 1825 and 1925 with 1800 and 1950 as outliers. And we see silver trading between 2175 and 2325 with 2150 and 2350 as outliers. Well, until Friday, gold traded within our normal trading range, keeping above $1,825. Then dipped to $1,799.75, some 25 cents below our outlier low, but it did close just shy of $1,812, $12 above our outlier low. Silver traded within our normal predicted range until Thursday at least, then dipped into outlier territory towards the downside, and before Thursday closed fell below the bottom of our outlier range. So we were too bullish. It performed even worse on Friday and closed 36 cents below our forecast outlier bottom. We did suspect personally that silver could have gone down to as low as $21. However, with the analysts forecasting that it was likely to rise, we edged on the side of caution. Next time, we shall go with our natural feelings rather than being influenced by traders. The difference between gold's high and low was nearly $87, and silver's difference was $1.92, much higher than recent. Now, looking at some of the other financials before we investigate gold and silver further and make our predictions, Bitcoin fell $6,691 and currently stands at $29,262, having actually fallen as low as $26,350 just 2 days ago. So it's recovered $3,000 in the last 2 days. The Dow Jones closed on Friday at 32,196, up 466 points on the day, but down 703 on the week. The S&P 500 closed at 4,023, up 93 points on the day, but down 100 points on the week. And the Nasdaq Composite closed at 11,805, up 434 points on the day, but down 339 on the week. We can see from these figures that over the past 12 months, the Dow Jones is down 6%, the S&P down 8%, and the Nasdaq down 11%. Brent crude closed at $111.55, that's down 84 cents. But WTI crude closed at 110.49, up 72 cents on the week, perhaps amending the disparity from the previous week. Now, of course, the thing to note, the dollar index stands at 104.56. That's up 0.90 on the week and has been as high as 105 at one point, which was the sort of limit that we were placing, really realistic limit on the dollar index. Now let's take a quick look at economic data that was published last week and what we anticipate being announced this week, and perhaps what we should all take particular note of. Okay, so if we take a look at the economic reports for last week, we can see that wholesale inventories were as anticipated. The NFIB Small Business Index was higher than anticipated, but the same as in the previous month. And that the all-important, and this was the key, the all-important Consumer Price Index and core CPI were higher than anticipated. So we were expecting, or the markets rather than us, were expecting a 0.2% rise for April, and it's actually come in at 0.3, that's the CPI, and the core CPI came in at 0.6 against expectations of 0.4. CPI year over year, 8.3 compared with 8.1. This was crucial, really, on Wednesday, and has just totally highlighted the fact that rates will be going up at the next Fed meeting, and 0.5% is almost totally guaranteed. Can you have almost totally? Not sure, but virtually guaranteed. Initial jobless claims actually rose slightly for the week, although the continuing jobless claims were down. The producer price index final demand broadly as expected. Then on Friday, the import price index had no change. There was an expectation of a 0.5 or 0.6% rise. And consumer sentiment considerably down compared with what it was in April and what expectations were. Now, this coming week, we have some interesting figures on Monday, which will be worth looking at, the Empire State Manufacturing Index. But more importantly, and probably expected to confirm what inflation has shown, retail sales. One can expect pretty poor figures here, unless, of course, people are borrowing to spend. But we suspect these figures will be really lower than many predict. Industrial Production Index will be also announced, and we have the NAHB Home Builders Index. On Wednesday, we have building permits, housing starts, and the Philadelphia Fed Manufacturing Index. Thursday, jobless claims, existing home sales, and then on Friday, advanced series report. So really, the true important day for this coming week is going to be Tuesday. So in view of all this, what can we really expect to happen to gold and silver prices moving forward? Well, first of all, we should not forget the geopolitics of Russia and Ukraine, as that is still omnipresent. However, inflation and interest rates are dominating the headlines, and rightly so. Gold and silver prices have, of course, been adversely affected, as we've seen the US dollar now rise for 6 consecutive weeks, and shows little sign of abating at present. The Fed's aggressive stance is likely to continue, and this will act as a headwind for gold and silver. We also think it appropriate to point out that those who've been invested in gold of late, and precious metals generally, because of the Russia-Ukraine situation, may face a decision to withdraw those investments should that situation eventually settle. There is a risk premium built in, and when that situation is eventually resolved, Providing it does not lead to chemical or nuclear war, it will encourage investors to move back into risk-on assets, many of which, for example equities in particular, will have already dropped quite significantly by then and will begin to look attractive once again. We cannot ignore that potential. Looking at gold from a technical point of view, we have some support at 1811, which are February lows, but stronger support at the psychological 1800 level. Our overall view is that 1750 lying underneath will be difficult to crack below in the very short term, though you cannot rule anything out. On the resistance side, we have of course 1850 and 1900 above. Frankly, there would have to be some serious news to see gold reach that level, the 1900 level, this coming week. Technically, the fast stochastic presents a buy signal, while the MACD suggests lower prices. Silver recovered a little towards the end of Friday, but we cannot forget, or should not forget, that it did touch a year-to-date low at one point. We have psychological support at $20.50 and $20, with 1960 likely to hold significant support because that represents 2019 lows, and techno investors are very much into these annual lows. Resistance exists at the 10-day moving average of $21.90, though we prefer the $22 psychological resistance level. Like gold, the fast stochastic suggests a buy, while the MACD suggests lower prices. Now, frankly, we cannot get excited re precious metals for the very short term, as we see higher interest rates on the near landscape horizon. If Russia-Ukraine settle down, there'll be further downward pressure. However, that may still take many weeks, if not months, to unfold. So, this coming week, we're expecting to see gold trade between 1750 and 1875, with 1700 and 1900 as outliers. We forecast silver will trade between $19.75 and $22.50, with 19 to 23 as outliers. What do you think? Please share your thoughts. Now, we only produced one video this past week, even though it's been an exciting week. We will produce 2 this coming week. We are then away for a few days, and then we will produce 2 a week until after the 15th or 16th of June, when the number of videos produced will start to increase, and we will reveal then some of the changes to the channel, which will be quite significant. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Finally, we wish you a safe, enjoyable weekend and, of course, a prosperous week ahead. And tomorrow we shall be repeating this video under a different thumbnail and headline. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.